All right. Hey, everybody. Good to see you. Thanks for coming. If you're joining us on YouTube, make sure to like and subscribe. It helps a great deal. We're always doing really, really cool market-related content, and it really helps a lot if you subscribe and you'll get notified of it. So welcome, everybody. Thanks, Anise, Hunter, Greg, everybody. Let's go ahead and read a legal disclaimer, shall we? Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So thanks for coming. Our guest today, here's a picture of him. And here he is on this side, actually. Vince is somebody we've worked with for a number of years. We really, really enjoy working with Vince. I like how he talks about money. I like when he talks about trading and like gives some recommendations. Hello? Greg? Okay. I'm just going to keep going. Okay. Well, in that case, let's turn over to Vince. Vince, how are you doing today?
I'm good. I'm good. Thanks. Thanks for having me.
All right, let's go ahead and make you a presenter right here.
Sure.
And then I'll go around and I'll make sure everybody turns off whatever they're streaming around the house. Here we go. All right.
Let me know when you see a blue slide. It says trading wins.
Yeah, absolutely. Coming 100% through.
Excellent. Okay.
All right, all yours. I'll get out of the way.
Okay. Thanks, Jeff. And thanks again for inviting me on. I appreciate it. Good evening, everybody. I'm glad to be here with you. I'd like this to be a very interactive hour that we spend together. Obviously, I'm here, as you can see my screen, to talk about our victory method. It's something that we put together just before the whole COVID thing started. So it's been a few years now, but it's been great. As Jeff said, I'm Vince Vora. I'm the head trader here at Trading Wins. And I am not going to spend any time on slides today. We're going to just move to the charts immediately and talk about this system. And what this is really all about is just well, let me just say, before we get started, take care of the legal stuff. Trading can be extremely risky if you're not prepared for it. So please don't go out and trade with real money until you're completely comfortable. Now, let's talk about victory. And this is a system that is completely based on technical analysis, no fundamentals here, just technical analysis. Now, it will work on any market, any time frame, any exchange. So whether you are, you like to trade stock, whether you are a day trader, a swing trader, a long-term investor, really doesn't matter. It will help you. And I've been doing this, as the slide said, for well over 30, almost 40 years now. And what I've learned are that you need really 4 things to be successful in the market. 2 are based on yourself, and 2 are market related. So the 2 that are market related are trend and momentum. If you can identify any chart that currently has a strong trend and has momentum behind it, it'll make a world of difference for it. It'll make things so much easier for you. And as far as the 2 things that you can only do, those 2 things are patience, have patience and discipline. What we try to do with this is have it take care of all those things for you. So while it will definitely identify a trend and identify momentum with you, it will help you. It's designed in a way to help you have patience, remain disciplined, and stay in the trade as long as you can. All right, so let me explain what you're seeing on the chart, and then we'll go through a few rules. Just want to give you a heads up here that all these arrows and circles that you're seeing, these are times when we would consider taking a trade. But I want to say up front that the idea here is not to take every single signal here. We are going to teach you exactly which ones you should trade and which ones you should not. When we were programming this, the only way we could avoid eliminating some of the good signals is to leave it the way it was. So what you see here, well, let me explain what you're seeing. The arrows, red or green, are new trade ideas. So if you're not in a trade and you see a green arrow like this, it means you want to trade to the long side. If you see a green circle, that means that the same criteria that came together for the green arrow has come together again. But the reason why it is a circle or a dot is because we're already in a trade. So the way you want to use these are, if you missed the first trade, feel free to get in now. And if you already did get into the trade initially, you can add to your position at this point. And then you just follow the trade along, and you'll notice that every single bar after that is painted green. Again, this is for the discipline factor. This is to prevent you from getting scared out of a trade. This will keep you in the trade until it's time to get out. So whenever you get into a trade, whether it's initial or you're adding to it, any change of color like that, you want to exit that trade. Now, you won't always see an exit flag. Sometimes the system will tell you to immediately go from long to short. Other times, it'll flash an exit signal, okay? But again, I will give you the rules behind the buys and the sells, the opening trades, as well as the closing trades through here. The only other thing you're going to see on this chart is this blue line, which if I hover over it, you will see is a simple 20-period moving average based on the close. So it's not an exponential, not a weighted. It is a simple period moving average. Okay? We've tested it with all sorts. This is the one that's worked best. I have traded with the 20-period MA, again, over 3 decades now. So it is my favorite indicator, a standalone indicator. So we are going to tell you which trades have the highest probability of success. And then for those of you who are looking to catch the trades at the very beginning of the move, we will explain what you can look for at the bottom as well as the top and try to take advantage of those as well. So how do we trade with victory? Well, a couple of ways. So this is a monthly chart of SPY, the S&P 500. So you could use this as just an overall gauge of the market, right? Is the market in an uptrend? Is the market in a downtrend? You know, as simple as that. So if it's green and above the 20, obviously we are in an uptrend. If it is, you know, red below the 20, we're currently in a downtrend. This is the monthly. So you could use this as an overall gauge and then drop down to whatever time frame it is that you're trading. My favorite, the time frame that I use most often is the daily time frame. So most of the charts I'm going to show you are going to be on the daily, but I will show you many on the daily, weekly, monthly, 1 minute, 5 minute. It works the same across the board. Okay, so you could, excuse me, getting over a cold here, still have a bit of a cough. So again, you could use it as a gauge for the overall market, or you could use it to pinpoint entries and exit on any chart. I am going to just flip through symbols that come to the top of my head, but by all means, if there's a certain stock, a certain Forex pair or whatever it is you want to see, please type it into the chat and we'll try to go through as many charts as we can. I'm just going to show you from the beginning the different time frames so you can see that there are valid signals across the board, okay? But let's start with the entry rules. What we want to see to enter the trade, the trades that have the highest probability of success are the ones that are don't only appear near that 20-period moving average, but have a slope on the 20-period moving average in the direction of the trade. Remember, The two things we want from the market are trend and momentum. The slope on the 20 tells us the strength behind that trend, the momentum behind that trend. So you could see a 20-period moving average with a slight slope, or you can see it with a very dramatic slope. Generally, anything around a 45-degree angle or so, and you know, you just visually gauge it, is considered a very significant slope. So something like this, very significant. Something like this, even better. The higher the slope in the direction of the trade, think of it as wind at the back of those candles, just pushing it forward. If you follow that one rule, it's going to improve your trading dramatically. But what Victory will do is pinpoint that entry point. And again, we want that entry to be close to the 20, not far away from the 20. When the 20, when price pulls away from the 20, it generally snaps back at some point. So the last thing you want to do is buy far away from the 20 and then experience that snapback against you immediately. You're asking for a bigger loss. Now, if you do decide to trade with Victory, what we will do is send you a couple of training modules with it, along with a money management plan that I guarantee you, if you follow, you will never take a big loss again. Just to take a minor step back here, when I first started, I took a huge loss trading. Most traders do, but to me, it was pretty devastating when I first started. I thought I knew a lot more than I did, made a huge mistake, and it was all based on money management, not a selection, not entries, not exits. It was money management, the amount of money I put into one stock. Anyway, it blew up my account. And from then on, I vowed to never take another big loss again. So I wrapped some money management rules around my trading system, and I'm going to give you those rules as well. So let's look at some of these signals. So for example, let's drop back now to a weekly time frame, just so I can show you that it'll work just the same on any time frame. So right here, any trade along here, I mean, think of it this way. When you have a slope like this, you can pretty much buy anywhere along that line and still make money. The fact remains is there's a very strong trend with a lot of momentum, okay? So we try to pinpoint the best times to get in to the market, but the advantage here is that there's such a strong trend that really wherever you get in, you're likely to make money. And that's what makes a big difference at the end of your year. When you focus just on the trades that give you the highest probability of success, what you're going to find is that you're going to have a lot more winners than losers, but also your winners are going to be much bigger than your losers. And that makes all the difference. All right. Let's drop back to a daily chart now. And you'll see here again. And here's a perfect example of a long trade that we want to take. So number one, you get either an arrow or a dot. Remember, the criteria is the same. It's just that we're already in a trade, and that's why we classify it as a re-entry here, okay? Now, the other thing is the slope on the 20. Very dramatic slope here. So perfect. And the other is the candle where that entry is very close to the 20, all right? Because most stocks, or any market, goes in cycles, right? It moves higher, and then you get a bit of a retracement, right? Oops, let me clear that if I can. There we go. Apologize for my drawing skills or lack of. There you go. And then it pulls back a little, and then it usually hits some form of support, right? Either a prior high or a moving average, some sort of support, and then it continues on. So these are the areas that we're looking to enter here. So we move forward, we pull back, criteria comes together again, we move forward, pull back, criteria comes together again, move forward, pull back. This time, it's sensing that trend is over, and so it tells us to exit. And again, I will go over in a second when you want to actually go short and when you do not. this is not one of those times where you want to go short, and I'll explain that in a second. But again, you get an entry signal, either an arrow or a dot. You get the slope on the 20, and again, the more dramatic the slope, the better, and the bar is close to the 20. At that point, you jump in, and one of the best things you can do for yourself on entry is once you see that entry bar, you mark the high of it, okay? Mark the high of it. And once that high is broken, that's when you get in. So what you're doing there is confirming that the stock is continuing to rise, right? We pull back. It seems to have found support, but what you want to do is be patient and make sure that it is following through. So once it breaks that high, off it goes, all right? You enter the trade and you stay in it until you see a color change. Now, if you get a nice dramatic move like this, you don't have to wait till the very end. You can scale out along the way. Obviously, you have a nice profit. You take, say, a third, right? It pulls back a little, it continues to take another third, etc. And we'll talk more about that. But this is the criteria that you want to see. And the only other thing you would add to this is to make sure that the road ahead is clear, meaning what you want to do is look for any sort of overhead resistance that might prevent this from continuing to move forward. And the way you do that is look to your left. So if we're going to enter here, we look to our left, and if we see nothing but blank space, then there's plenty of room for this to move higher. And your best case scenario is when you're near not just a 52-week high, but an all-time high. It means there's absolutely no prior activity at that level. Okay, if for example, if you were to get in here and you look to your left and there's all sorts of activity, the stock is going to have a difficult time ripping through that. It may get through it, but it's usually going to take its time, and there's going to be a lot more back and forth, which increases the risk of you getting stopped out. Okay, you want a nice clear road ahead. So if you look at whenever it moves into a new all-time high, it usually has a very easy time moving forward. Okay, so again, you get the signal, you get the slope on the 20, you're near the 20, you look to your left, blank space, you have a clear road ahead. You wait for the high to get taken out, you jump in, and then from there, it's easy. You either just wait till you have a nice profit and start scaling out, or you wait for a color change and exit your trade. The flip side is true for a short trade, all right? So if you get a red arrow or a red dot, along with a 20-period moving average slope to the downside, remember, you need the slope to be in the direction of the trade. If you have a dramatic slope to the downside and you're near the 20, and then again, you look to your left, and if there isn't a lot of activity, then you jump in. And again, you want to wait for the low to be taken out. That way you've confirmed that there's follow through, and off it goes. Okay. So it's really that simple. Now, near the end of the presentation, I'll pull up the scanner and show you how that works. If you're familiar with MetaStock, you've probably used a scanner many times. So it's very quick, very easy to find setups. And, they're very regular. You'll see them everywhere. But again, monthly, weekly, daily. Look, let's go to completely the other end, a 1-minute chart on the SPY. Here it is. Today would have been a fantastic day to be trading victory on a 1-minute chart. If you look at this, and I can scroll back, right? The early part of the day, there were, some pretty decent moves. What we thought at the time was a pretty decent move, here, and then in the opposite direction. But later in the day, we got this phenomenal drop here, where there are plenty of opportunities to get in and take advantage of that. Now, let's talk a bit about the signals that you do not want to take, okay? Generally, anything with a flat 20-period moving average, those are the times when you are most likely to get stopped out, most likely to be chopped around. Many traders lose their money during periods of consolidation. For example, right in here, this is a perfect example, okay? Right in here. So price really, it just goes back and forth, right? So if you were to go short and, you put your stop just above where you got in, it bounces around, it stops you out. You go long, it stops you out. You go short, it stops you out. It's just back and forth, right? That's where most traders lose their money. So what you want to do is avoid trading during times of consolidation, but trade during trends. And I've got a perfect example for you of this, and it's on Starbucks. Now, this is the 1 minute chart again. A great rinse there, but let me show you the daily chart here. And I think it's on the weekly that I want to show you here. The weekly or the monthly it was. Where was it? Just going to go by. Here it is on the monthly. Perfect. So you notice how we had a great little trend here on the monthly. And look at this buy signal. It doesn't get any better than this. You were moving lower, you cross the moving average, you come back to retest, you hold support, and you bounce. So you have a green dot, you have slope. The bar is very close to the 20. You look to your left, there isn't a whole lot there, even if I go back, and it just moves nicely. It pulls away from the 20, it snaps back, the same criteria comes together, right? And again, we're close to the 20. We have a dramatic slope. There's nothing to the left. We get in, boom, and over and over and over again. Now, up here, it starts to go into a channel. First, it gives us an exit, right? Now, this green bar here, we still had some slope on the 20, right? We're very close to the 20. And we look to our left, and there's really not a lot of activity. So this is a trade we would take, right? This is what we would consider a high probability setup. Now, nothing is 100%, obviously. They're going to have trades that do not work out. This was one of them. The beauty of it is that the second it starts to go against us, it'll change color. It'll get you out of there. Now, if you notice these light gray bars are on your screen, they may look a little yellow. Whenever you do not have a green or a red bar, it means you should not be in a trade with this stock at all. You should be on the sidelines, just watching, waiting for the next signal. So we get in here, we get an exit the very next day. But look at the size of the loss there compared to the size of the winning trades. And this is what I was referring to earlier. Not only should you have way more winners than losers if you follow the rules, but your winners should be a lot bigger than your losers. Your losers will be kept small. Now, the one thing that victory cannot avoid, just like there is no system that I know of that can avoid this, is a gap, right? So let's say that, we close here. It's November 30th. We close, and overnight there's some negative news either on the market overall or on Starbucks alone, and the stock opens down here, right? You can't avoid that. So it doesn't happen often, thankfully, but it does happen. But the money management plan that we will wrap around this will save you in situations like that. It'll still be a loss you can more than overcome because of the amount that you're going to be putting into each trade. But getting back to my my earlier point here, the stock started to consolidate. It's just in a very defined range. So between this point and this point, it goes back and forth, back and forth. But look at the 20-period MA during that time, completely flat, right? So that's telling you there is no momentum. Remember, not only do we need a trend in place, right? But we need momentum behind it. And the slope of that 20 tells you exactly how much momentum there is there. So we go through a consolidation here. Now, the longer the consolidation, the better it is, believe it or not. the longer it is, the bigger the move that will come out of it. And usually the move coming out of that consolidation is very similar in size to the consolidation itself. So when you see something like this, you just measure it. So look at the length of this line. I'll draw another one here, right? There. So from the start to the breakout point, right? Look at the length of that line. And if I measure that next move, is it not very similar? It is very similar, right? This is exactly what you want to look for. So the consolidation periods should not be frustrating to you. They should be exciting to you, regardless of how long it goes. You know, there are consolidations that have been going on for years, okay? And I'll show you one. The ETF for the healthcare sector, XLV. Have a look at XLV. And let's go down. You see this consolidation, all right? It looks like nothing here, right? This is the monthly chart. So this has been going on. Look at the date here, right? July of 2021, okay? We are in October of 2023. That's over 2 years of nothing, straight sideways action, okay? If we look at it on the weekly, you'll see it even clearer. You see that? So you do not want to trade in here. There is no clear trend. For those of you who have been trading for a while and understand pivots, right? Higher highs, higher lows, that's a trend. When you can't say you have either, right? Either higher highs, higher lows, or lower highs, lower lows, you have no trend. But the 20 period, most of the time will tell you that. It's flat, okay? And when you can define levels, so, you know, you can draw it across the highs and across the lows, and you'll know when this begins, because the way to know that a channel is starting is you have 2 touches on one side and at least one on the other. So you only need a couple of zigzags to know you're in a channel. What you don't know at that point is how long it will last. But the longer it lasts, the better it is. Because think of it. Look at the size of this line. If we were to break below the low, where would this line, you know, if we were to draw a line similar size, where would it take us? It would take us to this low, because that's where we're likely to go. And if we trade above the high, that's the best case scenario, because it means that we are in all-time high territory, and you should be looking for about a 2-year move to the upside. Okay, knowing that, then what you do is you just drop back to the daily time frame or whatever time frame you're used to trading, right? And you start taking those signals in that direction, okay? But the channels we want to avoid, okay? Those are not the highest probability trade setups that we want. Let me see if there's any symbol. Okay, Maverick was asking for the Euro USD. So not only does this, you know, can we use this with stocks? We can use it with Forex or any other market. Let's look at the Euro against the US dollar. Here we go. So your eyes should immediately go to the areas where there's trend, right? Where there's slope on that 20. If there's periods where, and this chart is pretty much all slope, it's just back and forth. There really are no areas of consolidation. So a really good chart to trade. So your eye should automatically go here. And what I want you to look at is any signal that happened throughout here. You know, was it profitable or not? Pretty much, right? Almost everyone. Now we have rules. So for example, you have one that is far away from the 20, and we'd say, no, don't take that, right? But pretty much anyone along that line is profitable. So again, you have an advantage right off the bat. And then if you follow everything else we're telling you, it just really comes together nicely. The other thing I'm going to tell you is that these signals that happen when slope is either flat or in the opposite direction, what can we look for in order to decide, do we get into that or not? In other words, if we want to take a little more risk, right? I am the probably the most conservative trader you will ever find. I hate risk. I despise it. You know, I'm scarred from that very first loss that I took. And so I will do anything to eliminate risk from my trading. But I do know there are a lot of traders out there that are much more aggressive than I. So the aggressive traders try to catch the very beginning of the move. And as where I want to capture the middle 60% of a move. I'm willing to give up the first 20% in order to confirm that we are in a strong trend, okay? And I'm willing to give up the final 20% because I know that there's no way for me to know when the end will come. So what I'm trying to do is grab the middle 60% and move on to the next trade, and I'm happy with that. But if you're aggressive and you want to catch the very beginning or the very bottom of a move, I'm going to give you 2 simple rules that will allow you to do that. And you can use that with anything, not just victory, anything. So let's look at that right now. Let me see. I think there was an example on Meta for that. Let's have a look at Meta here. Let's go to, by the way, look, how easy would this chart be to trade, right? It's pretty obvious, no matter how inexperienced you may be in the market, to know that we're in a strong trend here, right? And look at the slope of the 20, okay? And every time you get a signal there, you look to your left, there's nothing because it was making you highs, right? It's just so easy to do. And look, if it gets you out here, it tells you to get you out, to get out of the trade here, right? Sometimes because I designed this for myself, and again, I'm extremely conservative, the second this starts to go the wrong way, we want to get out of the trade. So there are a lot of times where I may get out and immediately there'll be a signal to get back in. Now this one's too far from the 20 for me. I would not have gotten into this one, but I would get into this one, okay? But there's a lot of times when you just see one red and then we're right back into the trade. And that's fine. I'm fine with it. Commissions are insignificant these days. It's nothing to worry about. So please adhere to the color change. If it's telling you to get out, you need to get out, and of your full position, that is. All right? It's not exit a third or to see how the next bar is going to go. No, we want hard rules. And I will give you that list, but you need to follow them to a T. And so if you see a color change, you exit the full position and go from there. Look at this beautiful trend, right? Now, let me see if I could find that example I'm looking for. Okay, so if you're trying to select a top or a bottom, so let's go to the top here. Let's say we're in this trade and it turns red, so we exit. We have to ask ourselves here, since it's not an exit signal, it's just a new arrow, but in the opposite direction. We have to ask ourselves, do we actually go short or do we just exit our long? In this case, at this point, I would just exit the long, not go short. Why? First of all, 20 sloping against us, right? So if we're following the set of rules that we need for a high probability setup, we're not going to find it until the 20 sloping lower, okay? So immediately I'd say no to a short. But if you're more aggressive and you want to try to find the top, here are the 2 rules that you need to look for. Number 1 is when you get that red signal, you want to look to your left and find an immediate high or low. In this case, a low. And ask yourself, did we close below that low? In this case, we had not here. That's rule number 1. If we had closed below the low, you could feel free to take that entry, okay? If that is not the case, there's one other thing you can look for, and that is a successful retest of the 20-period moving average, which at this point was not the case. But we closed below the 20, we move forward a little, and now you can ask, hey, can I enter on the second bar, right? That does close below that low. You can, but at that point, since it's farther away from the 20, you're taking even more risk. So you can if you're aggressive, but understand that the more you stretch the rules, right, the more risk you're taking on. So when I see a signal here, if I don't really like it, I don't wait till I'm 2, 3, 4 bars into the trade and then say, hey, this is working out great, I'm going to jump in. No. If I missed it, I missed it. And I'm just going to wait for the next one. Excuse me for a sec. So now we move forward and then we snap back. Now, when we get to the 20, what do? We get rejected there. And that's what we call, excuse me, a successful retest of that 20. In other words, think of it this way. We're making higher highs, higher lows. We have an uptrend. We pull back, right? And we get below the 20. Now, if we had closed right back above it and we still had slope higher, we'd want to go long, right? It's just a retracement before a continuation of that move. How do we know that's not the case here? Well, we pull back below, we try to break above the 20, but we fail, right? So now it's acting as overhead resistance. And once we fail, we know that that prior trend is over and we're likely to begin a new trend lower, okay? So at this point, a signal like this, you can feel free to take. Now, if you look at this bar, number one, it was very wide from low to high, right? And the point is it closed down here. Look how far away it is from the 20. So that to me would say too much risk. I'm not jumping in on that. What happens? It pulls back again. We get the same thing again. This time we're close to the 20. So whether you took this one or this one, okay? And at that point, look, you even had slope on the 20, right? So the only thing, you know, the other thing you can look at is look to your left and try to identify areas of potential support where, you know, it might prevent the stock from going lower. But so this, using those two rules, this is how you can get in closer to the top rather than waiting to get in a little lower, okay? If you had missed these and it flushes, just be patient, wait, let it set up again. If I saw this signal, again, for me, that's too far away, I'm going to sit and wait. What happens? I finally get the kind of setup that I'm looking for. Look at the dramatic slope on that 20. It's almost vertical, okay? I look to my left, there's a lot less activity. I'm close to the 20, and off it goes, all right? And these aren't small moves that we're talking about here. If you look at the closing price there, 161.78 on that day, you go down here near the bottom, and we're below 100. Now, again, are we going to get out at the bottom? We don't know where that's going to be, so no. We can scale out along the way, but where we would have gone out here. But that's still 129.77. So we went from the 160 area to the 130 area, a 30-point move. Plenty of money to be made there. Let me show you a few other things. So we looked at the euro. You can look at the British pound against the US dollar. And I'll go back to the daily chart here. So, you know, beautiful setups. This one, textbook, off it goes. This one, textbook, right? And some down here, this one, well, that one's too far away for me, but someone more aggressive would take that. You could look at futures, right? You want to trade crude oil futures, for example, right? Let's have a look. Okay, messy, right? Here's another tip for you. You do not want to trade a chart that looks like this, okay? And I've got an even better one for you. Zoom. Have a look at Zoom. When you see a chart, like when it first comes up on your screen and you see all this back and forth and all these very wide candles back and forth, that should scream risk to you. Reason being is what's going to happen? Wherever you get in here, right? You move forward and boom, big candle, it's going to stop you out, right? Try to go short, boom, big candle the other way, it's going to stop you out. This is a mess. You want to run from charts like this. You want very clean looking charts, like one that comes to mind is Microsoft, right? Very clean looking. Again, if you're more of an investor, you look at the monthly, right? Beautiful entries along the way. You're more of an intraday trader, a 1 minute, a 5 minute, you go down here. But it's much cleaner, much more orderly, much more predictable. When you get those crazy bars back and forth, it's so volatile, you can't possibly figure out which way the next move is coming. None of us can predict 100%, absolutely not, right? But again, when you see a clear trend like this with slope in your favor, and what you'll find is that when you have the strongest trends, the size of the bars are almost all the same, okay? Go back and look at charts, and I'm trying to think of one. Actually, any other symbols here that anyone wants to look at? I don't see any here, but let's see. I don't know, PHM maybe? Yeah, I mean, just look at the size of the bars. They're almost all the same, right? That's how you can tell you're in a very strong trend. And what you'll notice with the volume too, because a lot of people look for volume follow through on their entries. What you'll notice when you're in a consistently strong trend is that volume is consistent, right? It's if you draw an average on here, it's going to be right along that average. It's very, very consistent, okay? So that's when you know you're on a chart that you should trade. And again, you look at these setups with slope, right? I mean, the majority of them work out very, very well. All right. What did we look at? We looked at futures, Forex, stocks. Any crypto traders here, any Bitcoin, you can look at that as well. It doesn't matter. Now, again, look how messy this is, right? And you know, it hasn't been performing well for quite some time, right? We can go back here and look at, you know, the early days when this thing was first, you know, very popular. Look at the difference, right? When it first started going, look at the bars, very similar in size, right? Nice slope. Even it was getting really high. Sure, some bigger bars, but beautiful trend, lots of momentum, right? That's the time that you want to trade, not the choppy mess that we have now. Okay, if you're sorry.
No, I was going to say, finish your thought. I have a couple symbols from YouTube and a question.
Sure.
When you're, are you ready?
Ahead. Yes.
Okay. Let's see. Anise wants to know, how does the system tell us that you're in a consolidation or a no trend zone? And then he also wanted to look at KO.
KO. Okay, let's try to use KO as an example here. So these are your periods of consolidation here and here. One of the easiest ways to identify that is looking at the 20 period moving average, the blue line, right? When it's flat for a reason. What it does is look back 20 bars and it averages out that move from high to low, over the past 20 bars. Now, if we're in a consolidation, which, you know, we're pretty much in the same price level over and over again, there's going to be very little change. So the line's going to be flat. That's the easiest way to identify those areas. The other is to just take your trend line and try to connect the highs, or as many highs as you can along the way, and do the same with the lows. And you'll notice that the majority of them are within a defined area. So that's how you know you're in that area of consolidation. And again, how to spot it at the very beginning? Well, at least one touch on one side of the line and two on the other, and you know that you're in a consolidation. So for example, if you go up here, right, and then you pull back like this, okay, and then you start to bounce again from there, at this point, you already know you're in the start of a consolidation. You got 1 point on one side here. I should have drew it a little higher, but you know what I mean. there and 2 on the other side, right? So where is this likely to go? It's likely to go here. And if it breaks out, then great. You can look to trade to the long side. If it breaks out below the low, you can look to trade to the downside. And the longer this carries on, the better it is, excuse me, because the bigger the move that's going to happen after it comes out. When you have a slope like this, okay, here on Coca-Cola recently, there's been a lot of selling. The trend is clearly to the downside, but the degree of slope on the 20 tells you how much momentum there is. And when it's like this, these trades are so easy to take, right? Now, there are a ton of other things you can look at as far as technical analysis goes, right? We can look to our left and say, hey, if we look at these series of lows, I can draw a line right across here. So when we break that level, we should accelerate lower. Yes. Now, these are things that you will develop over time. And the more you learn about technical analysis, the more you put pieces together, right? If you're familiar with charting patterns, if you're familiar with candlestick patterns, all those things can come together. And so when you're looking for a new trade, and let's say you have 3 different candidates you're looking at, right? How do you compare one to the other? Well, obviously the degree of slope is the first thing you should look at, right? The higher the degree of slope, the better that is. But then in a case like this where you break a very key level, you come back to retest it and you fail, that's another positive, right? If you had a certain candlestick pattern there, another positive. If you had a charting pattern overall, another positive. So once you stack all that evidence, you'll quickly be able to tell which trade you should take over others, okay? But to keep it absolutely simple, so if you're brand new at this, if you're brand new at the game of trading and you want to just improve your odds of success, you don't need all the charting patterns. You don't need to understand all the technicals. What you need to understand are those 3 things. The signal here with the slope on the 20 in the direction of the trade, being close to the 20 and looking in the opposite direction to make sure there's some blank space. From there, off it goes, okay? Any other question, Jeff?
How do I find my mic? There was a similar request from Ennis that said he wanted to look at the GBP equals. And he's like, he also said, it's not follow red and green. You should use some technical analysis concepts, and that is good. So he liked your answer. And I did too. We had a question earlier from Rami who wanted to know if this works in Canadian stocks.
Oh, absolutely. I can show you any exchange. Actually, before we released this, we tested it ourselves on many different exchanges around the world. I'll show you a few examples. GBP, if you look at the far right here, the current candle, right now, it's telling you to go short. So let's do this together. Is this a valid short? Do we have slope in the direction of the trade? The answer is yes. We have pretty dramatic slope, right? Are we close to the 20? The answer is absolutely yes. Now, one thing I want to say is depending on your time frame, you want to make sure that that candle closes, okay? Because if it's just the start of that candle, all right, and there's still, several hours to go before that candle closes, it's too early to judge. Let that candle close and then see where you're at. If that arrow is still there, because the only time these arrows change is while the candle is live. Okay, so for example, let's say we're on a 5-minute chart and you're at the 2-minute point of that candle. Okay, if price is fluctuating, let's say it starts to go up, it gives you a green arrow. Okay, but before the 5 minutes are up, price collapses again, that arrow might disappear. All right, but if that 5-minute chart closes and that arrow's there, it's there for life. Okay, so there's no repainting or anything like that. But while the candle is active and live, it can change. So give this some time to close. But then if we look to our left, we can say, hey, there's a, excuse me, there's a bit of activity here, okay? Is there a lot more, behind if we keep going, right? That's what you have to look at. And there are other indicators like volume by price that you can put on that'll tell you how much volume was transacted at that level. That will help you gauge that. But otherwise, this looks pretty good. The other thing I will tell you is that if you're trading on a lower time frame and you want to confirm how strong of a signal this is, you want to look at the two higher time frames. So in my case, I trade on the daily. I'm going to look at the weekly and the monthly to confirm that the trend is in the same direction. Okay? So really, all I want to see on the higher time frames is which side of the 20 the price is on. So if this is telling me it's calling for a short, I want to look at the weekly and I want to make sure that price is currently below the 20-period moving average. Yes, it is. If there's slope, even better. I go to the monthly and confirm, is it below the 20? Yes, it is. Sometimes what you'll see is signals on multiple time frames. That's even better. Okay, so this looks like a good short coming up here. Now, to answer your question about different, will it work in Canada or anywhere else? Absolutely. Look, let me show you the Nikkei in India for a second. Signal, like it's technical analysis. So whatever you can chart on, the formula will work. So it doesn't matter whether it's not the all ordinaries in Australia, right? It doesn't matter. It's the same, everything. So if you're trading, what is the, I think it's .to, right? For the TSX. So Toronto Dominion Bank on the Canadian exchange, exact same thing. So is this a good trade to take? Look at this. Have a look at this. And so, this is a great example. I'm glad I ran across this. And I'm sorry, we're running a little late. I'm going to show you the scanner in a second. Let's say you get this signal, right? Do we have a slope? Yes. Are we close to 20? Yes. We look to our left. There's not a lot there except these highs here, these recent highs. So if you're worried about this, and first of all, for any of those of you who are familiar with technical analysis, this is an ascending triangle. For those of you who are not, think of it this way. Price got to this level and seller stepped in and pushed it down, right? Got back near that same level, the seller stepped in and pushed it down. Got back to that same level, sellers came in and pushed it down, right? So if I'm going to take this trade now, I'm thinking, hey, if it goes back to that level, how do I know sellers aren't going to push it back down, right? I don't know. So what can I do? I can wait for it to just break above, right? Once it clears that level, it's like jumping over the hurdle. The first time you slammed into it and fell back, slammed into it, fell back. This time you cleared it. So on this candle in here is where I'd want to get in. And as long as we're not too far from the 20, you're good. And if it's an all-time high, you're even better. And off it goes, okay? So there is a lot you can do with it. But to keep it simple, don't overcomplicate this. This is the one mistake that traders make all the time, overcomplicating and overanalyzing. And I wish I could go back in time and, recoup a lot of that time that I spent looking for new things all the time. What you want to do as a technician, as a trader, is find one thing that works for you and just repeat it. I always tell my students, trading should be boring for you. You should be coming to your laptop day after day and repeating the same thing over and over and over again, okay? Because it works. So if you just stick to these ones with slope, it will work. So whether you're trading in Canada, US, India, Australia, it doesn't matter. Whether you're trading Bitcoin, stocks, futures, Forex, it doesn't matter. It all works. It's because it's just straight technicals, okay? If you see these signals appear, all right, it's because there's a trend. And the other thing I will tell you is that to miss a move completely, you need something that goes absolutely parabolic, okay? That is away from the 20 and stays away from the 20. That is the only way you're going to miss it. And those usually you want to miss anyway, because they come back even faster than they went up. Okay, think of an AMC or a GME or any of those that took place. I'm going to leave you with one other simple technique that you can use, and then I'm going to show you these other tools because I know we're running late. That 20-period moving average that I've been trading with over 3 decades. Whether you choose to use victory or not, do yourself a favor and use the 20 as a hard stop. And this is what I'm talking about. Let's look at ARK, the innovation fund. You know, back in let's see where, let me get this up here. I think it was K. Yeah, there it is. So ARK, and I'm going to use the weekly chart to show you this, right? Remember back in here, Kathy Wood was an all-star, right? Everything going great. Now, I'm not trying to say anything negative about Kathy. I don't know her, and she had a phenomenal run here, no question. But this is the one lesson with the 20-period moving average. And for those of you old enough to have traded during the dot-com era, you know, the 1999-2000 crash, when first all those tech companies came out, went screaming higher, and then everything collapsed. If you had used this one rule, you would have kept all the money you made along the way. The problem is, as humans, we have emotions. And when something pulls back on us and has been this strong, we try to convince ourselves that it's just a temporary retracement before a continuation of that move, right? This is the one reason why you want to get out on a move below the 20. When you get that red line and a close below the 20, you want to sell everything because you never know when this can happen, okay? And the stronger that move, the faster that retracement. Why? Because we don't leave any support behind, okay? Just like, you know, we're into new high territory, right? So it has an easy time going ahead. If there's very little support below, it has an easy time pulling back, okay? And when it crosses that 20, get out of there. If you go to the SPY, for example, we can look at on the Qs or wherever. Remember the pandemic, right? We had that one big move. Yes, sure, you would have lost some money here. Even if you got in here, right, you would have given it all back. Yes, but you wouldn't have gotten killed, right? If you just hesitated a little, you would have found yourself down here. When it closed on the other side of the 20, get out of there, okay? It'll save you a ton of money. Now, let me just quickly show you a couple other features with this. If you go to the top left and you click on the view button and go down to expert commentary, it's going to bring up this little box that talks a bit about trading wins myself and the victory indicator. What this is for is to help guide you through that trade. What this will do is hold your hand throughout the trade, and it's extremely convenient, especially if you can't be in front of your machine while the trade is live. Okay, what this will do is identify when there is an opportunity and gives you a bit more information. So if you look to your far right, you'll see that there's a little red triangle there, right? It always defaults to the far right. Now you can move that by clicking above any bar or using the arrows up in here on the box. So if I move back here, so for example, here, so it's above this green bar. So when it appears and there is a trade signal, you'll notice that it'll add some text in between these paragraphs here. The color of the text will be based on the direction of the trade. So it's telling you that the victory signal system is currently signaling a long opportunity, all right? Now, if you go to the next day, it now will add a stop loss level there. So if you have to go to work, for example, you can't watch it during the day, before you leave the house, you can put a stop at that level, all right? And you'll notice that as we move forward, that number changes. So it's trailing that stop for you. Yes, when it exits, it'll show you on the chart. But if there's a quick decisive move against you when you're not there, this is there to protect you. Okay. So it will also, when you start to, when it identifies a new trade, it also talks about options. So if you trade this with options or want to trade it with options, it'll guide you a little on, what kind of expiry date you want to look for, what kind of delta you want to choose, the strike price of the option, et cetera. A bit more information there for you. So it's really, really helpful to guide you through that trade. Also, top left, click on the letter P here, the power console. This is where the scanner is. Go down on the left side here to the third tab, and on the Explore tab. Here is where you find all the different systems within MetaStock. If you go to the bottom, it's in alphabetical order. Here are the victory ones. Now, there's Vora Victory, and then there's Vora Victory Filtered. The filtered one means it has a minimum slope criteria, okay? So rather than giving you everything with a new green arrow, it's only going to give you the ones that have a significant slope already. So it'll save you time, all right? So, once you click on these, you come down here, you select what you want to scan. So for me, I use the US optionable stocks. I like to trade them with options. So I look at everything that has options available, which is about 5,800 stocks. Then I go here and I'll select the time frame, right? In my case, daily. You can select a 1 minute, a 5 minute, monthly, whatever you want. It's all there. And then this box will confirm what it is you're searching for, okay? So I have the regular Vora Victory filtered, which are the arrows with a significant slope. And I also have the re-entries, which are the circles with a significant slope, all right? You click on Start Exploration. It'll bring up this box. At the top, you can see 5,832 charts. You'll see how quickly it's scanning through it, okay? I'm not going to let it run because we don't have time right now, but the results would be populated down in here, okay? Let me see. Yeah, so this is what it'll look like, okay? And you have new long and new short. You'll see that there are zeros or ones. The ones that have ones, right? Those are the actual signals. So these four here are actually all shorts. There's no longs, okay? Then the slope, you can click on the title here and sort it by slope. The higher the number, the better. Since these are shorts, it's a negative number, right? So the higher the slope, the higher the number, the higher the degree of slope. Here you have the closing price and the symbol. You can cut and paste this into a watch list. You can click on it, click open chart and have a look at it, whatever you want. Super, super handy. All right. I'll give you a couple of ideas to look at. For example, the Qs right now, NASDAQ, on a weekly chart, showing a signal. The weekly bar closes tomorrow. So if tomorrow we still look like this, we're still above the 20, all right, with that slope, that bar is there, we're likely going higher here, all right? And the other one, which I wanted to bring up because I noticed, I don't remember who it was that asked for it, but I saw someone ask for SMH, which is the semiconductor index or ETF, right? There it is, same thing. Now, also, anyone familiar with charting patterns, that's a pretty good looking cup and handle formation starting to take place. So there's another one. You can look at individual stocks within that sector. So if you pull up the semiconductor sector, chances are you're going to find setups there as well. One that comes to mind is NVIDIA, probably the largest one, right? And there it is, NVIDIA. What a beautiful setup. Look at that slope there, right? Look to your left, nothing but blank space. This is the prior all-time high. There's nothing else overhead. And so if we confirm the higher time frame, right, there it is. It was well above the 20 off and running, Okay. Those are just a couple of weekly ones that come to mind. There are daily ones, but you can use the scanner. So, Jeff, I apologize for going over time. I'm going to turn it back to Jeff. He'll let you know how you can grab a copy, but I'll also stick around for questions if there are any.
Yeah, for sure. Gabrielle wanted to know, and I'll just answer this one real quick, if you can use the program with Australian data, and absolutely. We use this with Australian stock data.
Sure.
A couple comments. Jeff says, Jeff Lanier, who has a great first name, says he's been using this for May, and it's made him a better trader. A much better trader, is what he said. So I'm glad to hear that.
We also, and I'm sure you're going to mention it as well. I think several of our pro members are on here today. We have a pro membership that comes with the indicator where we actually have live chats with our members 3 times a week, Mondays, Wednesdays, Fridays. We send out emails with a market summary, trade ideas, and a weekend recap as well. So thanks, Jeff. It's nice to have you on.
Jerry says, hi team. Let Gabriella know that I'm here in Oz as a MetaStock and Vora Victory user. And here's my email if you need any help. So I'll send this over to you, Gabriella, just so you can reach out if you want to. Let's see. On YouTube, great presentation from Vince Vora from Mouse. And he went on to say, and this one is also exceptional, very thorough. Oh, I had also said, well, yeah, Vince does a great job. We love Vince, and he always does a great job. And he says, yes, and this one is extra exceptional. So good job today.
Thank you.
He wants to know, is Victory suitable for all market conditions?
It is. So what you're going to find is, again, the reason why I showed you the example of a messy chart like Zoom that you do not want to trade versus a clean chart, those are really usually dictated by market conditions. So yes, individual stocks will, can do their own thing. Like for the longest time, if you looked at IBM or Microsoft, they were doing nothing for the longest time, right? Then they go through periods of strong trends. But when there's a lot of uncertainty in the market, or you have an environment of very strong volatility, you're going to notice a lot of charts that are going to look like Zoom did, which on the daily, like this, right? Just a complete mess. When you see this, you just want to stay away. So whether it's the environment or whether it's the individual stock, right? You do not want to trade during times like this. Now, it's not that you're going to go through months or weeks at a time where you're not taking a trade. No, there are always sectors or certain stocks or Forex signals, et cetera, that are trending strongly while others are not. And the scanner helps you sort through that very, very quickly. But generally, the environment conditions are visible on the chart. One thing I will tell you that helped me, in order to train your eyes, you need to train your eyes to quickly spot charts you want to trade and charts you do not want to trade. And it goes the same when you're learning chart patterns or other technicals. If you don't want to miss things, you have to train your eyes. What I did for the longest time is I would review a minimum of 3,000 charts per day that I would go through manually, one by one, looking for these things. And in no time, your eyes will be trained and you'll spot things that you would never have in the past. This is a chart I would flip past immediately. Okay.
Very cool. Let's see. Actually, let me talk a little bit about how to get them. We have a few more questions. I know you don't mind hanging out for just a few more minutes afterwards.
No.
But I want to just talk a little bit about this. And I'm going to do it off camera because we're having a little problems with the upload speed when I was broadcasting a little bit earlier. But let me go ahead and make me the organizer real quick, and I'll just show my screen. And I do want to show the Vora Victory method. And just to kind of give you some insight, Vince helped us design this product to his specifications back in 2020. It has been one of the best-selling MetaStock add-ons that we've had. And the price that we normally put on it is $19.97 as a one-time cost. We're going to do a $9.97 seminar offer here today. That's going to include some things that I'm going to go into a little bit more detail on, but it's going to include a bootcamp class, a 30-day money-back guarantee. We like to back all of the products we sell with a money-back guarantee. The best software products should pay for themselves. So what we want you to be concerned is not the initial investment, which is $9.97, but really what it's going to be worthwhile for you or whether it's going to work for you. But we're also going to throw in 12 months of the TradeWinds Pro membership. Now, a few things that I want to say about the add-ons, and then I want to kind of show you a few things, is it has been the best-selling MetaStock add-on since we released it a couple years ago in 2020. It's got the detailed commentary, which you showed, the expert alerts, the full market scanning for triggers, re-entries, and new filtered scans, which the filtered scans actually was a kind of an update that we released for free. What I wanted to do is actually have a filter on there that allowed you to scan for stocks that had a slope on there. And so the filtered scans just allow you to do that. And then you do have the ability to system test. Now, in addition to that, one of the things that we're including, and this is something that's $97 per month, but we're including, Vince is including, I should say, Pro membership. And with Pro membership, you're going to get daily emails Sunday through Thursday. In those daily emails, you're going to get a market summary. You're going to get market-related articles. You're going to get trade ideas for both daily, weekly, daily and weekly timeframes. And I am now a brand new member of the Pro membership. And so I just got my email. Actually, I think this is the one that Vince sent a little bit earlier, but I just want to kind of go through what it says. So you've got the market summary up here. It talks about the Dow, the S&P, the NASDAQ. In this case, it's talking about the yield, spike in yields, inflation, of course, mortgage rates, banks. Here you have some trade ideas. Here's one on UUP, CHWY, weekly, some weekly trade ideas as well. And so on that, you're going to get something like that. Basically, every market day, Sunday through Thursday. Okay, you'll get that market summary, the market-related articles, and the trade ideas for the daily and the weekly timeframes. Every Sunday, Vince is going to send you a weekly recap email. Actually, I say Vince, it's going to be the team over at Trading Winds. And you're also going to have Zoom calls that are on Monday, Wednesday, and Friday. And generally, those last from 1 to 1.5 hours. We were kind of chatting today, actually, with our sales team. And we want one of our new guys wanted to know a really good way to get started with the product. And when we released the product, Vince and I actually sat down. I'm going to show you this right here. You're going to see me in my basement. There's a couple of videos here. But we sat down and recorded 2 training videos. Here's session 1. It's about an hour and a half. And then you've got session 2, which is about an hour and 8. These are complimentary. As soon as you own Vince Vora, they're going to show up. I shouldn't say complimentary. They're included with the victory. And in these trainings, Vince does a really good job of talking about other things to look for when you're looking at signals. He talks about looking at slope. He talks a lot about looking for previous support and resistance, different things to look for. And when we initially recorded these 2 sessions, our idea was to only put like our favorite up. But we liked both of them, and we felt like he did such a good job with both of them that we decided to just make sure both of them were available. So those are available. They're instantly available as part of it. And so not only are you going to get that $19.97, and so you're going to get $1,000 off that. $9.97 is what you'll pay. You're going to get that bootcamp class. You're going to get that 30-day money-back guarantee. And you're going to get 1 year of Vince's, looks like there needs to be a space in there, 1 year of Vince's Trading Winds Pro membership all included. So the other thing, we've had some question about what MetaStock is. And if you're not familiar with MetaStock, I could talk about MetaStock. I literally have for weeks doing training with overseas with people. But just to kind of give you a brief overview of what MetaStock is, MetaStock's a tool that allows you to do the alerts. It allows you to do the charting. It allows you to do the scanning. It allows you to kind of get all that expert commentary. We built an engine that allows for that. If you're not familiar with MetaStock, we've been making it since 1980. It's actually been rated the best software program in its price category for 30 years in a row by the readers, not the editors, but the readers of Stocks and Commodities magazine. So we're very, very proud of it. If you've never used MetaStock before and you want to get it as part of this offer, I'm going to throw in a free month of MetaStock. And I'm going to throw in a free month of the data as well. So I really want to what I want to be able to do is allow you to try this. If it's helpful for you, I know you're going to keep it. So we're going to give you all the training you need. We're going to give you the pro membership, which is something people really have loved. And we're going to give you that 30-day money back guarantee. So you can do that at 800-882-3040. You can chat online with us at metastock.com/sales-chat. And you can go to metastock.com/CSVictory. And I'll type those stuff up, but I would recommend you do that. So a couple of notes here. And I actually couldn't have said this better, Jeff. The 12 months of the Trading Wins Pro membership is incredible. The 3 market chats have taken me from an up and down trader, hopefully to an up trader. After these chats, I'm consistently profitable using those and victory. Vince is incredible. And you can speak to Up anytime and ask him to look at charts for you. You learn very quickly, and his trading ideas are fantastic. Jeff, I really appreciate your coming in. I'm glad. I too really like the victory stuff. I'm glad that. Thank you for all the kind words. I'm glad it's working well for you. Richard wants to say, how much is MetaStock? So I'll throw in 30 days for free. Pricing for MetaStock starts at $69 for what we call daily, weekly, monthly stock price. It includes the data that you need. If you're looking for real time, you'll be looking more at about $165 to start with that. Michael asked, does MetaStock work on a Mac or do I need to use a PC? It'll work on Mac, but it requires Windows, so you do have to put on Boot Camp or Parallels or something like that to get it to work. So, question for you, Vince.
Sure.
Now that you've had all these great positive feedbacks, I really appreciate it. You do such a good job. Nelson Press wants to say, how far to the left does Vince look for resistance? So when you're looking for resistance, are you looking a year, 2 years, 5 years? How far to the left you go?
Yeah, great question. If you're going to trade on the one time frame, I have a standard amount of data I want to see on a particular chart. So if it's the daily time frame, I want a full year of data. That's how far I would go back. If it's on a weekly, I would go 3 years. On a monthly, I would go back as far as I can. Since I look for confirmation on the weekly and the monthly for the daily, I look at all of those. And again, I focus on the ones breaking out to or that are close to an all-time high or an all-time low for shorts. If you're more of a day trader on a 1 minute, a 3 minute, 5 minute chart, you're really only looking back 2 days, 2 to 3 days. That's what you're looking for.
All right, Stavros, I'm not sure if this is a question or not, but I'm going to read it. IWM shows risk off, but Qs and SPY currently bucking that trend. Would you pay attention to that, possibly not putting your usual size on longs due to this, or continue to let your system guide you and continue? So yeah, how much does the broad market, I think to sum that question up, how much does the broad market influence your trades? And does
quite
it really influence size?
Yeah, so what I say to that is, you're going to look at both the overall markets as well as that individual chart that you're trading on, because at times, you could have a strong downtrend on the overall market and have a stock that is in a very strong uptrend at the same time. But that is a great question. My rule of thumb on that is when you go in with full size, when everything lines up. So if the Dow, the S&P, the NASDAQ, the Russell, we're all in a strong uptrend, and say you're trading, Apple to the long side, yeah, you go in full size. If there isn't a clear trend on all 4 index charts, right, then you go in with smaller size on that particular trade. So, it could be that Apple, which is part of the NASDAQ, is in a strong uptrend, but the NASDAQ is pulling back, is trending lower. If that's the case, I would only go in with half size on that Apple trade. that's the way I handle it. Great question, though. Thank you.
All right. Another question, I think this is more in my bucket. Can MetaStock perform a historical trend profit loss? So MetaStock does have the ability to do what we call a back test. I like our back tester. I might be a little biased. I've worked there for like 20, I've worked at MetaStock for 25 years now. I think it's actually closer to 27. But you do have the ability to go back and say, if I would have traded this specific methodology, how would it have worked on this stock or this stock or this stock? And you can even do a whole basket of stocks. You can do tons of stocks at the same time. And so, yes, we do system testing. Now, one of the things I'll say with that is there are certain inherent limitations to backtesting. There's a special disclaimer that you can read on our website if you want to know about that. But backtesting will only get you so far. Mastery Trust says, Jeff, this is an excellent presentation. I blame you, Vora, for that. So many gems of answers.
There's a couple of others that I'd like to answer if possible.
Oh, go ahead. Yeah, for sure.
Antonio, DKS is definitely in a downtrend right now. I know you can't see my chart, but definitely a downtrend. And there's a great question from Mouse, I think it was. He says, does the victory signals at the ends, or let me see, the end of the bottoms always trend, provide excellent signals?
Does the signal the end of the bottom sideways trends provide excellent entry signals? So it would be good to know if victory detects sideways patterns, tight consolidations, and entries.
So it can't predict when it's about to go into a sideways pattern. It can give you a heads up when it's about to come out of that sideways pattern. So picture a channel you're in. You have the defined levels above and below where that stock is bouncing between. A lot of times, just before it breaks out from one side or the other, you get a signal, a victory signal, let's say to the long side, with slope that happens within that channel. Now, I'll be honest, we haven't tested the accuracy rate of that. And one of the main reasons is I, again, am super conservative. So I don't look to try to outguess what the market's doing. I wait for confirmation and then take action. So regardless of how good it looks like it's about to break out, I wait for it to actually break out and then jump on that. Okay. What you want to try to avoid doing in the markets is trying to guess what's coming. If you're trying to be the world's greatest stock picker, you're going to lose money. I can almost guarantee you that. Do not try to predict what's coming. None of us know what tomorrow is going to bring. It is absolutely impossible to know what the market is going to do tomorrow. React to what's actually happening. That is why I love technical analysis. With fundamental analysis, you can look at financial reports and say, hey, this company has great earnings, great growth, and so on. But to time that on a chart is extremely difficult. Price, on the other hand, is everything. When buyers are buying strongly, the price is going to go up, and vice versa. If a lot of people are selling, price is going to go down. Price will actually show you what is actually happening right now. And that's what you should be reacting to, not spending your time trying to predict what's going to happen. Okay. So wait for confirmation, whether it's out of a breakout, whether it's a test of support, wait for it, give up that bit of a move at the beginning, and then take the easy move in between once that trend has already started.
Cool. Do you see anything else? I don't think I missed it. Oh, one of the things also that he added as part of that was just before the breakouts. But I'd always think from a personal feeling, I'd want to wait until just after the breakout to buy. Because when you're coming up to a breakout, you're hitting resistance. And so for me, my mentality would be like, okay, well, we're more likely to go back down than break out. So I'd want to wait till right after. So
exactly.
All right. I don't see any more questions. Did you see any more? I try not to miss any.
Yeah. No,
Okay.
I think that's about it. I mean, hey, one thing I will say is we've been working with MetaStock for a while. Great team over there all around. But just an absolute great support team and sales team. So if you have any questions at all about this, give them a call. They'll walk you through it.
Yeah, that's one of the things. One of the things I actually like to brag about too is our support. If they ever have questions, if you're a new customer, they'll sit there and they'll show you how to run your victory scans, or how. Well, they will anyway. But actually, with brand new customers that are new to MetaStock, we actually have an appointment we'll set up, and we go through as much as you want. But anytime you have any questions, you can ask our support. And there's many weeks where they get 100% on their surveys. They just run such a good job over there. And I'll listen to them on the phone and I'll be like, wow, Cappy is being so nice today. Or, oh, wow, this sounds so helpful. It's just amazing to me how well they do. And thanks, Vince. I appreciate that compliment.
Yeah.
All right. And I thank you for coming today. It was good to have you.
Thanks for having me again. Yeah. Thank you.
We will, thanks everybody for coming. If you're still here, still watching the YouTubes either now or in the future, hit the like and the subscribe. The phone number again is 800-882-3040. You can try it out on a 30-day money back guarantee. And we'll include the 1 year of Vince's Trading Wins Pro membership, the bootcamp class, everything you need to get started. So let's see. Richard said, is the monthly, yearly MetaStock price grandfathered, or will we have a price increase yearly? So we have had in the 27 years or so that I've worked for MetaStock a price increase or two. One of those was grandfathered and one of them wasn't, but they just don't happen very often. So there's your straight answer. Jerry dropped me an email with that one. I'll send you mine, and we can kind of give you a hand with that. I'll be happy to look at it. I'll have to look at your Pro Access personally. So just drop me an email. There's my email address, jeffrey.gibby@metastock.com, in case anybody wants to email you. You're welcome to, and I'll help you with it. All right. Thank you, Vince. I appreciate you coming to us. Everybody, thanks for watching. We'll see you at the next one. Thanks, Vince.
Good night. Thank you.
Hi, Kelly Clement here from MetaStock. Before you go, I have two quick things for you. One, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal, and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTubebook, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those two things. Thanks for joining us, and keep on trading.